So Boston Omaha, if you're not familiar, we'll talk about I'll just give a brief 20-second overview of the company. They are they're a holding company. They don't have any direct operations. What they do is they own a bunch of subsidiaries and a bunch of investments. Their subsidiaries currently operate in billboard advertising. They own a company called Link Media. They have insurance, and they have rural broadband internet. So those are kind of three, kind of all over the place business lines that they operate in. And they also have minority investments in a few primarily real estate operations. So they decided, and the reason they're very popular, right? Their Boston Omaha has gotten a lot of attention. One of the co-CEOs is Warren Buffett's great grandnephew. And two, it's set up a lot like Warren Buffett's company, Berkshire Hathaway, especially in its early days when it was just primarily an insurance company and it was designed to generate capital to eventually grow into a conglomerate. So a lot of people compare this to an early stage Berkshire. So what's the natural next step, being that it's 2020, getting into the SPAC game?
Right.
So Boston Omaha just launched the SPAC. It's called, Yellowstone Acquisition Corp. And they raised, I think, $150 million, somewhere in that ballpark. Yeah. Depending on how many if the underwriters exercise their options for an over allotment. But so they raised about $150 million, and their target is to acquire a business in a business line that they don't currently invest in, specifically in real estate or finance. They have some real estate investments, but no fully owned businesses in real estate. So that's what they're going to be looking for. They have a window where they have to find an acquisition target or else give investors their money back. And it just started trading. It's still trading right at the IPO price. The SPAC IPO'd at $10 a share. I think it was $10.02 last I checked. So it's hovering right at the IPO price. And like Asit said, when you're investing in this, you're investing in the management team, not a specific business. If you believe in Boston Omaha's management team, it could be that's what you'd be investing in. So I'll discuss kind of why it's beneficial to Boston Omaha to do this in a second. But have you looked into Boston Omaha's SPAC at all and seen what they're trying to do with it?
Yeah, I was very interested in this. I did have a chance to look through the S1. And it's interesting because the way that Boston Omaha is set up, there are a few things that prevent them from taking a big equity stake in a company. So let's just say that they wanted to use their own balance sheet. And it's a popular stock. They've had another follow-on offering this year. And so they raised some more capital that way. But really the way they're set up, they take some minority interest, but to do an acquisition where they substantially acquire all of another business, it's gonna get them pretty near the margins with a few regulatory things. And they explained this in their S1. We only have half an hour today, so I'm not gonna go into great detail about that. So
did we lose Asit or did we lose everything? I think it's just Asit. Okay, so Asit's frozen, so I want to get into a question that I see here. I see 5 of the same question essentially. So Aquaman says, do Boston Omaha shareholders benefit from this new SPAC, or do you have to buy the SPAC separately? Yes to both of them. So if you want to directly invest in the SPAC, as in take advantage of whatever business they end up buying, the direct way to invest would be to buy the SPAC itself. Having said that, Boston Omaha investors definitely own a big chunk of this. So the way this was structured is Boston Omaha gets essentially 20% of the SPAC shares for nearly free. I think they paid $25,000 for 25% or for 20% of a $150 million SPAC. So they essentially get 20% of whatever upside happens here. They also have about 7 million warrants, or it might be 4 million. I'm not sure the exact number, but they have millions of warrants that they bought to essentially buy more shares if their SPAC is successful. So since they got their 20% essentially for free, I mean, $25,000 for 20% of a $150 million company is essentially for free. So they have a 20% of whatever upside the SPAC creates, which could be huge. If they IPO the right company, it's essentially a risk-free bet from Boston Omaha's perspective. I mean, if the SPAC doesn't really go anywhere, they lose their $25,000 and whatever regulatory fees they paid. If they can't find a company to acquire, they just return investors' money. But if the SPAC is successful and they turn that $150 million investment by them and shareholders into billions of dollars, they own 20% of that, which for a relatively small company like Boston Omaha, whose market cap is about $450 million, that could eventually be huge. So yes, as a Boston Omaha shareholder, you benefit from this. This is not their primary business. It's not intended to be their primary business. It does open doors for them to be able to acquire or invest in a company that they normally wouldn't be able to. Like I said, they're about a $450 million company, and that limits the amount, even with about $100 million of capital on the side, it limits the business that they could directly acquire. But with a SPAC, all you need is a few $100 million, and you could acquire a company that's IPOs for billions of dollars and is eventually worth a whole lot more than that. So this just opens the door up to a more meaningful acquisition for them. So it's really a risk-free betting target bet for them. But like I said, if you want to just benefit from the SPAC, you would have to invest directly. But as a Boston Omaha shareholder, this is definitely a potentially needle-moving thing if it works out.